Navigating Payroll Complexities, a deep dive into contractor versus employee dynamics in the intricate world of financial operations. Payroll processing stands out as both a cornerstone and a potential pitfall for businesses. As organizations grow, the distinction between contractors and employees becomes increasingly vital, not only for accurate wage distribution but also for legal compliance and taxation purposes. This article delves deep into the nuances of payroll processing, particularly emphasizing the differences between handling payrolls for contractors versus traditional employees. Understanding these distinctions can prevent costly errors and ensure that your organization adheres to regulatory standards while optimizing its financial health. Understanding the core differences between contractors and employees. The foundation of effective payroll processing lies in understanding who qualifies as an employee versus a contractor. An employee typically works under the direct control of an employer, following company policies and receiving benefits such as health insurance and retirement plans. Contractors, on the other hand, offer services independently, often managing their own schedules, expenses, and equipment. Their relationship with the hiring entity is usually governed by contract terms rather than employment laws. Control. Employers have significant control over employees' daily activities, whereas contractors manage their workflows autonomously. Benefits. Employees receive various benefits mandated by labor laws, including Social Security contributions, whereas contractors handle their own benefit arrangements. Legal classifications and their implications. Determining whether someone is classified as an employee or a contractor carries substantial legal weight. Misclassification can lead to severe penalties, including back payments of taxes and fines imposed by regulatory bodies such as the Internal Revenue Service, IRS. To avoid such complications, businesses must carefully analyze factors outlined by the IRS, such as behavioral controls, financial independence, and the permanency of the working relationship. These criteria help establish a clear framework for making informed classification decisions. The role of written agreements. A written agreement serves as pivotal evidence during audits or disputes regarding worker status. Clearly defining roles, deliverables, and expectations within contracts can protect both parties involved and provide clarity in case of misunderstandings. Moreover, having documented proof of independent contractor relationships simplifies reporting processes, ensuring that all tax-related responsibilities are met accurately and promptly. Taxation nuances. Deductions and withholdings. Tax treatment diverges significantly based on whether an individual is categorized as an employee or a contractor. For employees, employers are responsible for withholding federal income tax, Social Security, and Medicare taxes from their wages, then remitting those amounts to the government on behalf of their workers. Independent contractors do not enjoy these same withholding protections. Instead, they bear responsibility for calculating and paying estimated quarterly taxes themselves. This difference underscores the importance of educating freelancers about their tax obligations. Social Security contributions for contractors. One notable disparity involves Social Security and Medicare taxes. While employees contribute a percentage of their paycheck toward these programs through FICA taxes, independent contractors must pay the full amount themselves, effectively doubling their contribution burden compared to regular employees. This dual payment requirement highlights another reason why clear communication between business owners and their freelance workforce about tax responsibilities is paramount. Clear guidance ensures everyone understands their role in fulfilling these duties correctly. Compliance challenges and best practices. Maintaining compliance presents unique challenges when dealing with mixed workforces consisting of both employees and contractors. Businesses must navigate complex regulations governing minimum wage laws, overtime pay provisions, and anti-discrimination statutes differently depending on worker classification. Regular training sessions for HR personnel regarding evolving labor legislation can mitigate non-compliance risks. Staying updated on changes in state-specific laws further strengthens a company's position against potential violations. Documentation and record-keeping. Robust record-keeping systems prove invaluable in demonstrating correct classification statuses during inspections or audits. maintaining thorough records encompassing job descriptions, payment methods used, and duration of engagement provides tangible support for claims made about worker status. Additionally, leveraging digital platforms capable of tracking time spent on projects allows clearer delineation between project-based engagements typical among freelancers versus ongoing commitments characteristic of full-time staff members. Impact on business operations and financial planning. Choosing between hiring employees or engaging independent contractors affects not just immediate staffing needs but also broader organizational strategy. Full-time hires generally require greater investment upfront via salary packages supplemented by benefits, influencing budget allocations significantly. Conversely, utilizing a pool of skilled contractors offers flexibility, enabling companies to scale rapidly according to demand fluctuations without permanently increasing overhead costs associated with retaining permanent staff members. Budgetary considerations across workforce models. Employment models influence financial forecasts dramatically. Fixed monthly salaries accompany traditional employment structures, allowing easier prediction of recurring expenditure items related to compensation departments. Freelancer-based approaches introduce variability since payments fluctuate month to month contingent upon active assignments undertaken by said individuals. Thus, incorporating contingency funds within annual budgets proves prudent when relying heavily on external talent sources. Technology integration in modern payroll systems. Advancements in technology have revolutionized payroll management capabilities across industries worldwide. Cloud-based software solutions enable seamless integration between human resource functions and accounting modules, streamlining end-to-end processes from timesheet approvals to final disbursements. Prioritizing adoption of automated payroll technologies reduces manual data entry errors commonly encountered in legacy paper-based environments. Furthermore, AI-driven analytics enhance visibility into spending patterns, facilitating better-informed decision-making regarding workforce composition choices. Security features within contemporary platforms. Data privacy safeguards embedded within modern payroll platforms reassure stakeholders concerning sensitive information handling procedures. Encryption protocols safeguard against unauthorized access attempts, targeting confidential employee databases containing personal identifiers alongside monetary figures. Implementing multi-factor authentication mechanisms fortifies protection layers surrounding login credentials, preventing malicious actors from exploiting vulnerabilities inherent in less secure alternatives. Global considerations for multinational organizations. As enterprises expand globally, navigating cross-border payroll complexities becomes inevitable. Differing national legislations regarding minimum wage thresholds, vacation entitlements, and pension scheme requirements necessitate localized adaptations of standard operating procedures. Cross-functional teams comprising specialists fluent in regional jurisdictions assist multinational corporations maintain alignment with diverse regulatory landscapes spanning continents, thereby minimizing exposure to jurisdictional discrepancies. International tax treaties and reporting obligations. Leveraging bilateral treaties aimed at mitigating double taxation facilitates smoother transactions involving foreign nationals employed overseas. Proper implementation of transfer pricing methodologies prevents artificial inflations/deflations affecting consolidated earnings. Reports submitted periodically to governing authorities. Accurate completion of country-specific forms coupled with timely submission timelines guarantees avoidance of penalties arising from delayed disclosures mandated by respective host nations housing operational entities thereof. Evolving trends shaping future payroll landscapes. Rapid digitization trends continue reshaping conventional notions surrounding payroll execution modalities. Rise of gig economy paradigms introduces new categories requiring distinct treatment vis-a-vis existing binary frameworks distinguishing sole proprietorships from corporate entities. Emerging legislative proposals contemplating revisions towards standardized definitions of worker status signal impending shifts potentially altering current paradigms currently observed amongst practitioners engaged deeply within this domain. Adapting strategies amid regulatory shifts. Remaining agile amidst policy transformations demands constant vigilance regarding proposed amendments slated for implementation soon thereafter. Engaging actively with industry associations furnishes opportunities acquiring insider knowledge pertaining upcoming modifications likely affecting core operational facets substantially. Fostering partnerships with legal counsel experienced exclusively within labor law domains equips management teams adequately prepared anticipating eventualities stemming from unforeseen regulatory alterations impacting bottom lines negatively unless preemptively addressed comprehensively beforehand. Conclusion and summary. Mastering the intricacies of payroll processing demands nuanced comprehension distinguishing between employees and independent contractors. Precise classification decisions influence myriad aspects ranging from legal liabilities incurred annually to strategic positioning vis-a-vis competitive market forces continuously shifting dynamically day by day. By adopting best practices centered around meticulous documentation maintenance combined with embracing cutting-edge technological innovations available commercially today enables contemporary firms sustain superior levels of operational excellence consistently regardless prevailing economic conditions faced externally.